Welcome everyone to this webinar where we will be discussing the way trading US dollar margined crypto options can safeguard and de-risk your digital asset strategy. My name is Angèle Spiteri-Paris and I'm here representing HedgeWeek, and I welcome our panelists and will ask everyone to introduce themselves in turn. Justin?
Hi, thanks, Angèle. Hi, I'm Justin Buitendam, and I'm the Global Head of Institutional Sales and Business Development here at Bit. Bit is a cryptocurrency exchange covering spot, perps, and most importantly, options. And I'm very happy to be here with our partners, Darley Technologies, QCP, Copper, and of course, HedgeWeek. Thank you.
Thank you. Simon?
Hi there. Simon Nursey. I run derivatives trading at QCP Capital. We're a Singapore-based digital services provider, and one of our specialities is market making, crypto options, where we're a top house in block trades and market making.
Thank you. Taka.
Hi, my name is Takatoshi Shibayama. I head the sales for APAC for Copper. Copper is a digital asset custodial service. We have two lines of revenue streams. We have the prime and custody business that Copper becomes the digital asset custodian to service our clients worldwide. And we also have an enterprise business where we license our technologies to banks and securities brokers around the world. One of our largest clients are State Street. And thank you very much for your audience today.
Brilliant, thank you. And finally, Paul.
Hi, I'm Paul Braverman. I'm a Quantitative Analyst at Darley Technologies. We're a market maker in crypto derivatives, particularly crypto options, but we also have an OTC business. Thank you.
Very good, thank you all, and welcome again. We'll jump straight into our talking points. First of all, what drove the industry to create an options market for crypto? I'll come to Justin first.
All right, great, thank you. Look, there were several factors that drove the industry to develop crypto options. There was a lack of traditional investment products within the crypto options space. As the market grew, it was generally started as a spot business, a crypto market, and slowly progressed. And as the institutional interest picked up, institutional businesses were looking for products that they were used to trading in traditional markets. The reason the rise of the crypto options came more into play was the constant volatility that we see through the crypto markets. It gives the traders and the institutional players, better risk management tools that they're able to use these options to hedge portfolios and continue that going forward. So we at Bit noticed all this with the institutional investment community coming to the market. So we launched our exchange at the end of 2020, primarily to focus on growing that segment of the business. We continue to lead the space now and certainly pushed our way into innovation and leading our way with US dollar margin products to help bring more adoption into the crypto option market.
Okay, Simon, from your perspective, what did you see that's been driving this?
I think it was always a little bit of a no-brainer. We have option, as an instrument in all of the major markets, FX, commodities, equities, rates. It's an essential part of forming a complete market. It gives access to a sort of a new range of customers and very sort of specific way of expressing views. What took a little bit of time in crypto is all of the sort of components that need to back up sort of building out the marketplace. So there's been sort of exchanges around for a while, but to start off the market, we needed a workable futures market first, so that we can hedge these options. And more importantly, we also needed customers. So So QCP's been trading options since 2018, early 2019, and the sort of key thing we focused on was educating customers, bringing them in. In those days, it was very much about sort of showing hodlers that they can make use of the high volatility associated with crypto to generate additional yield on their otherwise sort of static assets sitting in wallets. And we sort of built things out from there over the years. We've sort of added foundations that are doing hedging, crypto funds, family offices, macro hedge funds, asset managers, all now very active in the crypto options market. And we help bring them to market.
Okay, very good. Paul, from your perspective, how has this impacted?
So I'd like to take a step back and say, why are there derivatives in cryptocurrency? And like in traditional markets, the explanation is basically, the first derivatives were for farmers, and the first derivatives in crypto possibly were for basically miners hedging out the risk. That is some of the market today. But it's and then you obviously you built the complexity of derivatives on top of that. You have a view on corn or something, you have a view on Bitcoin, you're a miner. But I think the real reason to emphasize what Simon said for Bitcoin options or generally crypto options is that they allow you to express a more complex view. You have two dimensions of your view. You have the volatility space, and then you have the directional space. And if I think that Bitcoin is going down, but I don't want to take a complete short, I might buy some puts. It's quite nice. And then you need a lot of pieces of financial infrastructure to get options to work in crypto space. So yeah.
Okay, very good. Taka, from the custody angle.
Yeah, just like talking about what Paul mentioned about historical facts. Interestingly, the first futures market was actually built in my country when all the samurais were being paid in rice, and they needed to sell that rice in the futures market, so they created that in Osaka. So just a fun fact there. But as it pertains to crypto, as you know that crypto markets are very volatile, and had as genesis probably right after the futures market was created, and especially during this time when we speak to our clients that want to express their views around where they think the market's going or how they want to create profit through these volatile markets. Obviously everybody would like to trade options for that. And initially when Copper created our product called ClearLoop, which I'll get into a little bit later, we've designed it for the options market because a lot of our clients will hold initial margins on exchanges for long periods of time, and we've went out to a lot of the options market or exchanges that provide the options products. So especially after the downfall of FTX last year, there's been a lot of trades going through that product, and just in the month of November and December, we saw about 30% of those exchanges volumes come through our product. So it's been in a perfect timing for a lot of these investors who are looking to trade on that volatility. So that's what I see through speaking and just examining what our clients are doing during this period.
Okay, very good. Simon, have the events of the past year contributed to the needs for managers to use crypto options?
Yeah, well, the crypto's definitely maintained its reputation for volatility this year. Crypto hasn't exactly covered itself in glory, but certainly options are as relevant, this year, last year, as they were before. So options in general can be used in many different ways, and as a hedging product and as a means to reduce risk is just one of them. but certainly, this last year we've seen a large number of very wingy events, and well, arguably, for the most part, unpredictable. Which means that the sort of the ability to either hedge an underlying exposure by buying protection, sort of using an option as a form of insurance, is very relevant. And we see, we see regular flows from crypto funds, asset managers, typically sort of buying short-dated puts as a sort of short-term protection that they then roll over on critical events to sort of shore up their core longs. So yeah, we see them use that way. The other way is that even when expressing a speculative position, a fresh position, as Paul mentioned, using options, you can do that in a much more nuanced manner. You can express a bullish view without necessarily exposing yourself, to your full capital downside. You can target rates, you can target particular levels, and then trade around those and on the timescale. So I'd say in general they've shown their use last year as they do every year, just as a means to protect against events, but also express better the views of users.
Okay, thank you, Paul. In fact, I come to you next. How have the events of the past year affected the need for managers to use crypto options?
Yeah, Simon's covered most of my points, but I'd like to point out, especially this year compared to last year, volatility was much cheaper. And so if you wanted to buy your insurance puts on, extreme events, and like this year is kind of odd because we've had a large number of extreme events and, relatively speaking to my memory, cheaper volatility. So you could have bought your insurance at a discounted rate relative to the year before, and hedged against the extreme events. And then let's say it would be a much more conservative way of getting into a bullish position. If you didn't want to, expose yourself to the downside risk. If you thought, maybe Bitcoin pops this week, maybe it pops next week, you buy short-dated options.
Okay, Justin, is there anything that?
Yeah, look, obviously, crypto's faced a lot of headwinds this year. We've had a lot of major events which have affected the space in many ways, but options have continued to grow in their popularity, mainly because of their risk management features. People can hedge their portfolios and hedge their positions, and they can also take directional trades as they see these events unwinding. So, as Paul just mentioned, their vol has been cheap, so the protection has been cheaper than in other years. And this has given, the traders, that ability to come into the market and, definitely express their views and protect their portfolio. We've seen the rise, and this is something that we've done a bit of moving to a US dollar margin exchange, is to help with the asset managers coming into the space. So there's a lot of asset managers that don't want to hold crypto on their balance sheet due to the headwinds that we've faced as an industry and the volatility, but they want to be able to trade in the crypto space to take advantage of the extreme moves we had. So we've really tried to develop a product for them to have the ability to do that. So whilst we don't like the headwinds that cryptos face, and it gives a lot of negative spin out there in the market, I think it's definitely helped the adoption of crypto options market, and we will continue to see that growth happen.
Okay, very good. Taka, do you have anything to add in terms of?
Very little to add to compare to all the professionals here, but one thing that I've started to see is that a lot of the borrowing lending has dried up in the market, and compared to previous years, and we started to see people hunting for yield through selling options as well. So that's something that people discuss with me when they talk about the options market and how they want to generate some yield, even though the low interest rate market provided a good market for, a lot of market neutral people and people who are doing borrowing, lending, even just a few percent more above the risk-free rate was enough. But now that the risk-free has gone up quite significantly, people are still looking for yield generation, but there's not enough tools to do that. But they find selling options in this market can potentially create that kind of yield.
Fantastic, thank you. Paul, I'll come to you for the next talking point to outline how crypto options work and what the benefits are of trading in US dollar margined options.
Sure. So crypto options work very similar to options in traditional markets. A call is the right to buy, a put is the right to sell at a specified price. Most exchanges have European style options with an Asian averaging at the end. And the big difference between, let's say, all the options out there in the crypto space is whether they're US coin margined or dollar margin or stablecoin margin. Actually, interestingly enough, there were a few exchanges that had dollar and like if you went long a call, you would, or if you went short a call, you would have to post coin. If you went short a put, you'd have to post dollar. That was quite interesting. But so let's just start off with the original way that crypto options were traded or are traded, which is coin margin. So you have basically you park all your Bitcoin in an account, and then you can sell options on this. This is quite nice if you kind of are a holder and want to basically keep your Bitcoin, and you've no interest. The directional exposure to Bitcoin is the feature, not the bug. So then you can just sell covered calls on this, and it's quite convenient if you happen to be have a large portion of Bitcoin. That's a position you want. For more traditional asset managers, a lot of other people, the kind of make a directional exposure to Bitcoin in your collateral is not a feature, it's a bug. And so, I consume things that are relatively stable in dollars. Most people do. Most people are judged on returns in dollars, not returns in Bitcoin. And so previously, if you didn't want that exposure, you could actually hedge out your collateral on a different exchange or, a different way. And then that would create a lot of complexity in the trade. If Bitcoin goes up too much, I have to liquidate my hedge or something like this. And then you also have the awkwardness of Bitcoin's gone down and, something like this. And my collateral is shrinking at the exact same time I might be needing to cover some stuff. And so traditional, coin margined or USD-Margined options, basically, I don't have all those complexities of the trade. I can just say, I think Bitcoin's going up. I don't have to worry about, I think Bitcoin's going up and I've had to buy a bunch of Bitcoin. And that's also awkward if you think Bitcoin's going down, and to get your put positions in, you need to actually bring over collateral in Bitcoin and then hedge that collateral as well. So yeah, I'd say I've been very excited for this move. So.
Right. Okay, Simon, what are the benefits of trading in US dollar margin options in your experience?
Well, I think Paul's illustrated very well the complexity of managing multiple multiple margins and all the P&L things. I mean, from our point of view, we've got a sophisticated ALM desk. They take care of all of my sort of funding requirements and all of the moving of collateral around. And I've got a sophisticated risk management system which turns all this into Greeks. So for a house like us, it doesn't matter, but it's quite clear that if you don't have these things, then the additional hurdle of managing multiple collaterals in multiple coins and trying to sort of aggregate your risk and adjust your positions for these margins that you hold on exchanges, it's just a headache that a lot of people don't need. And maybe more important than that, right? I mean, crypto is all about managing margin. Yeah, because the volatility levels are so high, and because capital is generally scarce, managing your margin requirements, avoiding margin calls, and all these things is absolutely critical. I tell my traders making money in crypto is easy. Keeping it is very hard. Yeah, there's there are many ways to get caught out, and sort of getting caught out by margin in the wrong place, in the wrong coin, at the wrong time is a sort of a very fast way to liquidation and big losses. So yeah, I'd say that's the sort of the key advantage of dollars, and a key risk consideration for anyone thinking of trading this.
Okay, thank you. Justin, do you have anything to add on the benefits of using these?
Well, definitely, Simon and Paul have covered most of it. But look, from an exchange perspective, we were originally a coin margined exchange, but understanding the complexity of collateral management and the directional exposure of that collateral, we saw the need to transition the exchange to a US dollar margined exchange. This definitely gives the benefit of you don't have to be moving collateral constantly. You can hold one collateral being a US dollar term, and that gives you the ability then to trade across, every product on the exchange. And also, the big thing is in a downward moving market, in reference to what Paul was mentioning, your collateral and margin keeps shrinking. If you're holding it in BTC and ETH, sure, you're hedging your position, but, the collateral keeps going down. So, that was generally a conversation we had and decided on the change. And we also felt that there's a lot of bigger asset managing firms out there and trading houses out there that don't want to have that exposure and directional exposure of holding the underlying assets. And this gives them the ability to come in and be, settled in dollars, which is what they're used to in traditional finance, and be able to trade within the space. So it's definitely an advantage, we feel, as an exchange. And the other advantage, it gives us as an exchange the ability to add further products. So it'll know, we don't have to just stick to ETH and BTC. We'll be able to move into the alt space. And this is something that, can be quite volatile. So people's collateral management in the alts is something that would be, difficult to handle. But when it's dollar settled, it'll be much easier for that to happen.
Very good. I'll come to you, Taka. Do you have anything to add on this subject, or we can also move on to talking about managing risk?
Yeah, I'm very little. I mean, just from the custodial perspective, that even though Copper supports 500 plus different crypto tokens, the majority of the custodized assets are generally BTC, ETC, and ETH and US dollar stablecoins, and probably US dollar stablecoins is the largest one. So why, I think that it's a normal progression that people would move towards, a less volatile asset like US dollar stablecoins for any collateral. I just think it's a natural progression.
Okay, very good. I'll stay with you now to talk about managing risk better with US dollar margin options. From a custody point of view, how do investors and managers manage their risk in a more efficient way?
Yeah, I'll address the risk that probably our professionals here would not talk about. Is one thing that's really important that from a custodial perspective is mitigating counterparty risk. So at Copper, when we designed our product, obviously the custodial element is the most basic part. But majority of our clients, 80%, I would say, are trading firms like your market makers and hedge funds and et cetera. And they just don't want to store crypto assets and just hold on to them. They like to trade it. They like to trade it on exchanges. They like to trade OTC. They want to do DeFi. They want to do staking, etc. There are many activities that they like to do. And when we designed our product with a lot of our partners, that what they mentioned was that, especially for like things like options, they leave funds exposed on exchanges for long periods of times. what we have for options, that these are things called initial margins that you have to leave on exchanges. And for spot, you trade it, you can send it back into custody, but for options, once it leaves custody, it's going to be exposed on exchanges. So through the events that we've seen in the past, and especially last year, leaving funds on exchanges is not a great idea. So what we've designed is a product called ClearLoop, which allows for investors to trade on exchanges without having to move their assets on exchanges. We do a special integration with the exchanges whereby the exchanges also leave funds with us for the purpose of settling trades. Crypto industry kind of evolved without custodial banks and clearing houses and prime brokers initially, and everything was done by the exchanges. So what we decided to do is take those custodial elements and trade settlement elements out of the exchanges, and Copper providing the infrastructure to handle all those elements so that there's a segregation of duty. So the mechanism of how this works is that if a client trades on exchanges, they don't need to move funds. We act as a collateral agent, so we lock those funds within their wallets. And whenever the client needs to close that trade, then we'll take the balances from the exchanges for settlement purposes and net it off. So we've been doing this for Bit.com for quite a while, and we have other partner exchanges. This for specifically on the crypto options, as I mentioned, because they have their funds on exchanges for long periods of times, gives a lot of comfort that if in any case, and I don't think that would happen for Bit.com, but if something happens to the exchange, whether it be a bankruptcy event or suspension of withdrawals, which we've seen many times over, the client's assets are safe, and on top of that, the settlement is also protected. So this is something that we find that is going to be a standard going forward for custodial services.
Great, thank you. Simon, from your perspective, how does managing risk, how is it impacted by using US dollar margined options?
Yeah, I mean, like I say, from a risk point of view, there's no real difference. It's or from a sort of exposure point of view, there's no real difference. The main impact is sort of managing your assets, managing your margin, and all the sort of basic aspects there. But I'd say sort of addressing the wider question of how we can use options at the moment. We've seen, I think it's probably easier by example. We've seen three sort of big themes this year in terms of flows. The first one is we've seen sellers of long-dated calls, both ETH and BTC, and these are guys looking to generate yield, happy to sort of sell high strikes. They think that the outlook of the year is going to be kind of sideways, and sort of looking to generate an additional yield on otherwise sort of dormant assets. But with the sort of flows of the first few weeks, we've seen probably the second type of flow, which is buyers of short-dated call spreads. After the initial move up, spot breaking a little bit, we saw a lot of buyers of sort of 18K, 19K, 20K strikes in BTC in order to sort of participate in the move, but with limited risk premium, and cheapening that by expressing it as a call spread. So buying, let's say, 20K, 23K call spreads. View being that we'd see that initial breakout and then a bit of consolidation, which is kind of exactly what we've seen. So in terms of expressing specific views and therefore minimizing the amount of premium that's risked and minimizing the downside. I'd say option users being quite effective. And the last example is sort of the other big flow we've seen since the beginning of the year has been buyers of these short-dated puts. I'm taking advantage of the sort of cheap falls that we saw during to open the year, and arguably still cheap actually, to ensure that they've got downside protection in what otherwise is going to be their outlook is a broadly positive year.
Okay, very good.
With spot, trading higher. So yeah, I mean that's practically how we see in options being used to express views and manage books.
Okay, great. Paul, how does the use of these options help manage risk in your experience?
So I think I addressed it a bit on my last question, maybe pre-answered this question. But the one thing I'd say is, sophisticated desks, if it's in coin, we can always hedge that out. It's not a problem. It's nice for smaller guys, but what is nice for is even, it's basically, it can reduce your capital requirements to some extent, because you don't have to have this hedge sitting somewhere else. You can just have everything on one account. You can have, you can short with your perps and have your options all on the same account. An exchange like Bit does portfolio margin on this, recognizes that, if I go long call, short put, and, hedge with the perp, there's not much risk in that position. And, I don't have to have all these weird, things eating my capital up. I can just, get to the business of market making.
Okay. Justin?
Also, Simon covered most of what I was going to say.
Yeah.
No, just to obviously, Paul and I, we're very, very similar in the view on this. It's, it's definitely the use of a risk management tool in the US dollar margin options. It's great for capital efficiency. And, yes, for, highly professional teams like QCP and Darley, they do have ultimate risk management desks and are able to move their funds and collateral around at will. But, newer entrants to the space and up and coming teams don't have that ability or sophistication just yet. So for them to be able to participate, and use options to take directional exposure, to do it in a dollar format is definitely something that they're able to do. And also hedging of their out and out portfolio position. So, they can be, hodlers holding, could be miners, structured product providers, whatever is the use case for it. To have that they're able to be settled in dollars becomes, a very nice thing for them. And it's ultimately a great risk management tool, for all players and entrants into the market.
Very good. Thank you. Paul, I'll come back to you to talk about the return potential in using options, particularly around hedging risk in short and long positions.
So I'd say the main, I guess I see two different return potentials for options. One is that I can kind of, let's say, guarantee, my return doesn't go too negative by buying puts. And the other one, I'd say, kind of just the opposite side, is that I can, let's say, if I just kind of have capital sitting there, and I want to sell out of the money options on this. I'm not going to give exact prices, but if I sell like let's say 30K calls for 6 months, I could roll that twice a year and get a pretty penny, and worse, depending on my So if I have a native directional exposure to Bitcoin, that I can just sell my covered calls and get kind of a yield on my Bitcoin, which is quite nice.
Okay, very good. Simon, from your perspective, return potential.
Well, return potential. As much as you like. It depends on your risk appetite. If you want to roll over short-dated calls every week, you can easily be generating 50, 60, 80, 100%. But it's a high-risk strategy. If you want to sell, sort of longer dated calls because you've got a specific level in mind where you're very happy to be taken out of a long position, the covered call strategy, then it's 10% or so, 10, 11%. These are all sort of reasonable numbers. So look, it's just a tool. The range is limitless. The number of strategies are limitless. It's, I mean, it'd be a cliche to say it's limited by your imagination. I'd say it's limited by sort of skill and knowledge, rather. It's a tool. You need to be able to apply it in the right way and understand the risks associated with it. And we are talking about, a sophisticated derivative in a very, let's say, sort of a challenging market. So you need to be fully aware of what you're doing and how you're managing that, and maybe choose your partners carefully in sort of helping you put these positions on and express these risks. But look, the opportunities are there, and it's an instrument that's now widely used, widely adopted. There's several billions of volume going through every day. It's a big market.
Okay, very good. So yes, it depends on the sophistication and the understanding of who's using them. Justin, from your point of view, return potential, how do you see it from an exchange perspective?
Yeah, similar to Simon, obviously it depends a lot on the strategy that the client is using, right? So if we look at now the market is starved for yield. There was a lot of previously that people were able to put their tokens in and earn a yield. This can be done through options, through covered calls and covered puts. So we'll see a return perspective coming from that, from the structured product providers. But from the professional traders and the institutional traders out there, again, it's their imagination on their strategies, but a lot comes down to their risk management tools. How they manage those strategies, manage their risk is where the return will lie. Options still can be, it can be risky. Nothing's ever not risky, especially within trading. So if you don't understand them properly and you don't understand proper use of risk management, no matter how good your strategy is, you can ultimately turn that into a negative strategy. But we find it as a great tool for traders to be, hedging risk and taking directional view. And definitely there's a lot of upside potential within using options to trade.
Okay, great. Thank you. And talking about the safety of the underlying assets and the differences between crypto options and TradeFi equivalents, Taka, can I come to you to address this?
Yeah, I think I've explained that a little bit in my previous answer, but basically compared to your equity options or FX options that I've seen before, for crypto options you have this thing called initial margin, and that you have to keep it exposed for a long period of times, and that doesn't really exist. And I think this was, correct me if I'm wrong, was created so that to mitigate counterparty risk, because not all participants in these markets are regulated and licensed, etc. So this is something that I've when I came to understand crypto options, this is one thing that I didn't really notice from my previous financial times. So yeah, I'll just drop this one for the beginning.
Okay, thank you. Justin?
Yeah, look, the crypto options, there's minor differences between crypto options and options in traditional finance. It's still, it's an options product that's been transferred, and we now obviously use it within crypto. One big difference is obviously crypto is a 24/7 market, whereas traditional finance isn't. So you ultimately need to be managing risk over weekends and certainly 24 hours a day. The other difference is obviously the premiums, implied volatility within crypto traditionally has been high. Last year we had times where vol was very cheap, but this can make crypto options a lot more expensive than what traditional finance people have been used to in their markets before. But we continue to grow, and I think that implied vol it's a great thing for the market. This is the reason that more and more people come in. But as the market matures and more players are involved, I see that coming in a little bit further as time progresses.
Okay, great, thank you. Simon, you've mentioned the similarities between crypto options and traditional options. what are the differences that you see that maybe the others haven't mentioned?
Yeah, it's been quite I mean, I think I've sort of had a similar experience to Taka there, sort of coming from traditional markets. There's a lot of things that you don't have to think about because there's already been covered, which suddenly become the most important thing moving into crypto. So Taka talked about credit. And clearly, the last year has shown us that credit is absolutely key in crypto markets. You can't take anything for granted, including exchanges. The other sort of the one that actually keeps me awake the most, and I spend the most time sort of watching out for is liquidity. I traded FX options for 20 years, and I never really had to worry about running out of euros or, whether I had enough yen or whether I could deliver that. But in crypto, that's everything, We spend an awful lot of time running big ladders, big grids, checking that, in every scenario, we're going to have the assets available in the right place at the right call level to deliver to the right people. It's and these are the factors that sort of typically, if you get these wrong, this is the sort of stuff that blows up a desk or blows up a otherwise profitable strategy. So it's worth the focus.
Yes, definitely. And before I go around the room just to get your outlook, we have a question from one of our participants, which asks, what mechanisms exist to help guarantee that purchasers of tail hedges actually get paid in a tail event in the crypto options market? Who's happy to take that? If anyone.
I suppose I can take that. There are no guarantees, so you need to think very carefully about correlation in such events, right? So, if you're buying a tail hedge, what exactly is the scenario that you envisage? If it's a tail on the downside, is it because you see an exchange going down or Genesis disappearing or whatever? It's or is it a tail hedge on the top side, in which case you're seeing an acceleration, maybe disappearance of fiat money. So build scenarios, don't just buy a tail hedge, build a scenario around that and decide what's the best way to express that, where best to put that option. But don't forget that, with any derivative, if you're trading on margin, then you've always got the ability to take out accumulated gains early and before expiring, and preferably as soon as possible when the market's moving. So I don't think you necessarily have to think about okay, I absolutely need the entity to be there at expiry. You just need it to be there sufficiently long enough to take out your money when things do hit the fan.
Okay, thank you very much. We have 2 minutes left, so I'll just ask everyone for just a brief overview of what you think the future holds for this market. Justin?
Yeah, for this market, we're going to continue to see the growth of the options space, and one part of that growth is something that we are really pushing here at Bit is moving into the alt options space. And I'd like to thrilled to announce our collaboration with one of our partners here today, Darley Technologies. We'll be launching one of our new alts later this week within TON options. This will be revolutionary for the market and something that will continue to drive the adoption of what we have in crypto and move it, past just beyond BTC and ETH and pick it up into some of the alts. So we're really excited about the future of that and about the future growth of the crypto options space as a whole.
Great, thank you. Simon?
Yeah, I'm quite excited this year to see exotic options being introduced. much like options were a little bit of a no-brainer because that's what you've got in TradFi markets. I'm quite sure we've got barrier options, we've got European barriers, we've got structured products, and I think that in this sort of environment, and we anticipate a bit of a sort of sideways market this year, sideways, maybe slow appreciation. This is the sort of place where exotics are can be a good way of expressing range-based and sideways views and generate yield that way. A lot of the QCP options business was sort of born in 2019 after the last sort of spike and crash in the period of which was for a lot of markets a bit of a crypto winter, but that's exactly the environment where options thrive. Similarly, I think the next year will be about structured products and such like.
Okay, thank you. Taka, from your perspective, what does the future hold?
Yeah, from a custodial perspective, whether you want to trade options or not, everybody's happy to express their views on the market, whether it be sideways, going up and down. But what's most important, we believe, is that people can trade these options and derivatives through safe custody. We support trading firms around the world, and this year we've structured and this is to address the question also from the audience, is that this mechanism that we created is a trust structure around the client's assets and the exchange's settlement balances. So we are monitoring our clients' exposure on each exchange, and then also having the exchanges leave those net settlement balances with us. So in order to complete and protect the client's assets and also the exchanges, we've created this trust structure so that if an event of a bankruptcy, then the trust structure will protect the assets and the trade settlements in order to complete that trade. So this is something that we are driving forward with all the exchanges that are coming on board with us and the existing exchanges that have integrated through our ClearLoop product.
Great, thank you. Paul, just a brief outline of what you see going forward.
Yep. As Justin said, I'm incredibly excited for Con options and just generally excited for alt options. I see USD-Margined as not necessarily, you could do it other ways, but it's very nice to not actually have to hold alts to trade alt options. And then I think as education in the space increases on what options can do for your portfolio, I see a bright future in options.
Fantastic. And we come to the end of our session today. Thank you very much to all the speakers for participating and for giving your views. Thank you to all our audience members for listening. And that's the end of our session.